Hey everyone, the stock market hit a new all-time record with the S&P 500 hitting 5,500 for the first time and holding it at the close. We got a market that's melting up. Why is it melting up? It's melting up because we are achieving the mythical soft landing, which has never really been achieved before. And the only reason it's being achieved is because of artificial intelligence. You're not feeling the increase of the stock market very much if you're not in the Magnificent Seven. And I'm in the Magnificent Seven. I invest in an ETF that all they invest in is the Magnificent Seven. Good old MAGS, MAGS. It seems like the members of the Magnificent Seven take turns going up. NVIDIA has recently cooled down to where it's just kind of holding where it's at. And meanwhile, Tesla has jumped 10% when it didn't really have very good news. It's like their deliveries were worse than expected. There's signs that we don't have a recession yet. The news is very choppy. You have some things that are doing well and some things that are doing poorly. For example, cars are doing well. Tesla did worse than expected, but GM, their sales increased over last year. Now, the comparison to last year, their sales increased like 16%. And so increasing to a bullish quarter, they still managed to eke out an increase. And Toyota has been right with its bet on hybrid vehicles, which is where I think a lot of people are right now. They're going to make the transition to electric, but the hybrid makes it a little easier. They don't have to worry about range, which is really the only worry I have about having an electric car. Their sales went up 9%. It is the leading car company, Toyota. The mythical exponential growth we were going to get with Tesla has been delayed. And it's delayed because of the range issue. And until they can get a battery that goes 1,000 miles, that will always be an issue. A lot of the hope with Tesla is that they eventually will come up with a robo-taxi. I was very skeptical of this. I've owned a Tesla Model S for about 3 years. And the first 2 years, it drove pretty good, but it was making mistakes, and I wasn't comfortable with its mistakes. But now I see that it's progressed, and it's not making the mistakes it used to make. You can program the Tesla so that it uses artificial intelligence like halfway, let's say. That is, it will drive the speed limit and stop for stoplights and any objects that gets in its way. I decided to go the full route and just let it drive me home. And it drove me home. There was one minor intervention when it went over the stop line a little bit, like 2 feet. But other than that, it did very well. So you still got to watch it. But I think in a year, I won't be making little adjustments to it. Another thing that encourages me is that inflation isn't taking off. It seems to be subdued with the recent PCE, the personal consumption expenditures, and Powell is being dovish when he is interviewed. He qualifies that statement quite a bit, but the bottom line is that he is being more dovish. He receives data much faster than the rest of us do. And so I think he's receiving good data on inflation, which I don't think inflation is the problem. The problem would be if recession comes up. We worry that the jobs market is going to fall off a cliff, that all of a sudden unemployment's going to go up. And there's signs that's not going to happen. Job openings were expected to decrease to below 8 million, and they came in with the JOLTS, which measures the job openings, came in a little bit above 8 million. We're getting good data. Again, it's very up and down, and this is the sign that you're getting a soft landing, that we have a sluggish economy in some sectors and it's hot in other sectors. Is the home building sector has turned sluggish. It was very hot, and and this home building stocks were going way up. But now they've turned sluggish and no one is buying lumber. But you expect these mixed results. The only thing that really isn't mixed is artificial intelligence. Right now, I'm investing significantly in MAGS, the Round Hill Magnificent 7 ETF, which invests only in the 7 largest companies on the NASDAQ, the Magnificent 7. And looking at the chart, you can see that MAGS has made about 40% since the beginning of the year, while its double leverage version, MAGX, has made about 66%. It's a nice ride up. You've been told to diversify and to get out of these stocks. Man, when you got the hot hand, are you really going to get out of it? When I see signs that this is starting to break down, then I will get out of it. I see signs that everything else is breaking down. This is not breaking down, and I'm sticking with it. That's the way I roll. Thank you.